due to the drought a few years ago, due to tariffs, due to the closure of the Mexican border to imports of Mexican feeder cattle in the United States, it's really thrown off the market dynamics, and it's really really unprecedented because we are still sitting at all-time low. I say all-time, but 7-decade lows of the amount of cows out there, and very tight on the number of cattle on feed. And the market economics are such that we just haven't had enough time to hurt demand, and B, incentivize producers enough to add on to the number of cows out there. And so until we do that, we're still going to be fighting very tight supplies in spite of some of these efforts to, lower the cost of beef prices at the consumer level.
So, Chip, what has led to the recent all-time highs in cattle and beef prices?
Yeah, these all-time highs, multitude of things driving us here. It's almost like a perfect storm that's hit over the last 3 or 4 years. You've had a multi-year drought going back 3 or 4 years, really screwed up the cow-calf herd, led to a lot of liquidation. So that tightened the numbers up. You had some inflationary pushes here with some of the post-COVID, money flow that came into consumers' pocketbooks, pushing beef prices up because of a lack of supply. Also, some of the recent tariffs that we've put in place to some of these countries that we import beef from has led to increasing beef prices. And then finally, the closure of the Mexican border because of the New World screwworm has affected the flow of feeder cattle that flow out of Mexico into the southeastern part of the United States. And so that perfect storm in the last few years has led to essentially record low cow-calf numbers because of liquidation from the drought and these other issues. It's really been a perfect storm that's driven these higher prices.
For the person who's not familiar with the livestock market, when you say cow-calf side, break that down for like a fraction. What do you mean? What do you mean by cow-calf?
Yeah, the beef industry really is segmented several different ways. Number one is the cow-calf person. This is the rancher that's out buying cows and raising calves, selling those to feedlots or backgrounders, which are the other two portions of the cattle industry. So you've got feedlots. They take the feeder cattle that have been weaned from the cow, take those from, say, 750 pounds to the weight of 1,500 pounds, which we've been raising them to recently, and then they go into the food system, into the beef market. In between the cattle rancher and the feedlot are sometimes the backgrounders, who they take freshly weaned calves and put a couple 200-300 pounds on them, get them transitioned from being freshly weaned into that 700-pound range that's going right into that cattle feedlot.
Wow. So there's actually like a middle person that kind of gets them from freshman to JV, and then the JV to the varsity in the backgrounder role. Is that a big role in the cattle market?
Yeah, all three of those play very important roles. Sometimes there's some integration where operations have a cow-calf operation. They have a backgrounding operation. If they run some row crops, they put those freshly weaned calves out on, freshly harvested cornfields and put some weight on them, or wheat fields. And then they have a feedlot as well. So there are very different segments of growth cycle through a cattle's life cycle, really, from birth through the cow-calf operation. Spend a little time putting some weight on in the junior high, I guess, middle school of the backgrounder, and then they're off to finishing school at the feedlot operation.
Emphasis on finishing. So let's do a follow-up on how have the costs been on the cow-calf side. Got row crops, moving higher. What does that look like?
Yeah, part of the cycle here of why we have such low numbers of cattle, number one, cows and even beef cattle on feed right now, is not only because of the drought cycle that we saw a few years ago, cutting those numbers of cows that are out in the plains and the far northern plains, but also because coming out of COVID, costs have just skyrocketed, and then we haven't really seen much of a reduction in those. And costs meaning everything from equipment, all-time highs. Labor costs have gone up. It's been hard to get people to work because of the whole effects of the COVID situation. Really top to bottom, it's been an increase in costs. And then as beef prices have risen, as cow numbers have shrank, then the input side of it, the corn market has been fairly stable, but to buy feeders then to in order to feed out on the feedlot side, those numbers have been record high as well. So it's just been top to bottom increases from many different sectors of the input cost cycle in many reasons. But essentially, we're sitting here not only at all-time highs of cattle and beef, but it's also all-time highs on the input side as well.
So with all that, why the increase in beef imports in the last few years?
Yeah, beef imports play an important role as well. And due to that drought cycle of a few years ago when we, had to liquidate a lot of the cow herd out there, we had to replace that somehow. So we started importing more beef from countries like Brazil, like Australia, and even Mexico. And the issue with that now is due to some recent tariffs, we no longer are importing the amount of beef that we used to out of Australia and Brazil in particular. And now we have the border closed between the United States and Mexico as far as importing feeder cattle. So it's just really been an add-on effect here on top of lower cattle numbers across the board due to several years of drought. Now we have a lack of supply of feeder cattle from Mexico due to the closure of the border. And we have tariffs on these countries that we typically would import beef. And that is, more of the leaner beef that we use in the grind for ground beef, right? We're importing that out of Australia, Brazil, Argentina in some cases. And so those supplies have dwindled. It's led to record all-time highs in beef prices as well.
How have recent tweets from President Trump, who seems to be wanting to drive the prices of beef down, how has the president's tweets been affecting the markets?
Yeah, these recent tweets that we've seen, President Trump seems really locked in on trying to lower the price of beef. That's easier said than done, and he's had a couple tweets that really affected the cattle market. In fact, took $30 or $40 a hundredweight out of both live cattle and feeder cattle. Now, the reality is, I'm not sure it's so easy because of some of those issues, I talked about earlier with the tight supplies, the lack of imports of beef in the United States, the closure of the Mexican border. But President Trump is 2 for 2 on a couple of his big campaign promises. Number one, he wanted cheaper egg prices when he got in. He got that. And that was easy because we were able to import a bunch of eggs in from Europe and other countries to offset some of our lack of production in the United States. He wanted lower oil prices. He got that. That might not have been all by his doing or the drill baby drill, aspect, but one way or the other, we do have cheaper gasoline prices. Seems like his the third leg of the stool he wants here are cheaper beef prices. I'm not so sure that this beef market, because of all these structural issues, is easy as President Trump thinks to lower. But certainly his tweets had an initial knock-on effect of really pulling the rug out from under the market here in the short run.
So the national herd remains small. I think we're at the 7-decade lows, right? Which seems to be, at least from where I'm sitting, a primary driver of the higher prices. So even if the president's best intentions are to drive prices lower, it still doesn't change the fact that beef supplies seem to be tight and are expected to tighten further. What do you think of that?
Yeah, over the last really 100+ years, the cattle market has gone pretty regularly in about a 7-year cycle. They call it the cattle cycle. And the reason for that is because it takes multiple years to build a cattle herd up When prices become depressed and get low because of big numbers on the herd, we start paring back those numbers. You can't do that overnight or even the matter of days or weeks. That takes a long time to add to or take away the total numbers of the cow herd and the number of animals on feed. So, due to the drought a few years ago, due to tariffs, due to the closure of the Mexican border to imports of Mexican feeder cattle in the United States, it's really thrown off the market dynamics, and it's really really unprecedented because we are still sitting at all time low. I say all time, but 7-decade lows of the amount of cows out there, and very tight on the number of cattle on feed. And the market economics are such that we just haven't had enough time to A, hurt demand, and B, incentivize producers enough to add on to the number of cows out there. And so until we do that, we're still going to be fighting very tight supplies in spite of some of these efforts to, lower the cost of beef prices at the consumer level.
So you mentioned something that was very, very interesting. With the your row crop business, we know we have seasonality. We can talk about old crop, new crop spreads. We talk about a crop year. Talk to us about the seasonality patterns that you might see in livestock cattle.
Yeah, seasonality certainly is part of the livestock side of production, but it's also been thrown off a little bit because of all these outside influences. So typically, you go through the cycle of spring calves. Those calves take a while to put some weight on before they hit the feedlot. The market dynamics recently, the last few years, because of a multi-year drought, because of the closure of the Mexican border, because of a lack of imports of beef into the U.S. market, tightening up ground beef supplies, has really thrown off the seasonality. And then on top of that, some of these tweets and the policies it looks like President Trump wants to lower beef prices throws out of whack your normal supply and demand dynamics. And so it really throws the market for a loop. It gets you out of what's a normal seasonal pattern, and it really causes havoc in the market. And it's hard to manage risk around that, really.
Yeah. So you see prices settling. I think yesterday we were looking at the market was had a limit move in kind of bouncing here. Market's kind of flat today, comparatively speaking. What do you see happening in the near term for the live cattle market?
Yeah, it seems like the live cattle market has balanced itself, meaning for a long period of time, the cash market was 12 to as much as $15 above where the futures were. And that gave us a lot of bullish enthusiasm on the future side. Any break that you saw in futures was met with buying because the cash market, the real market, was much higher than where the futures were. And so it led to that convergence. We've finally seen that. It's taken a long, long time. Cash and futures are about converged. And so that's been, more of a basis game. You've seen still on the feeder cattle side, though, the feeder cattle index has been way above, as much as $20 above where the futures have been. And that's led to this big recent surge higher, outpacing, in the case of feeders, outpacing a move into all-time highs in feeders versus where the live cattle were. So really, I think the live cattle market has kind of balanced itself. It still seems like the feeder cattle market could have some potential upside based on a strong cash market right now. But one thing is for sure, the volatility that we've seen here is unprecedented, and that usually doesn't go away overnight.
No, sir. So is with the market volatility being what it is and futures, being limit up and limit down and zigging and zagging, it makes it hard to pick your spot to hedge. Is LRP the best way for people to manage their risk in livestock right now?
Well, LRP certainly is a good way to help manage risk in these volatile markets. It's a newer type of a product. They've changed that a couple years ago and increased the subsidy, increased the amount of animals you could do at any one point in time, the head count on that. So it's certainly a very viable, good option. I wouldn't say it's the best option. It depends on the operation. Part of what we do is customize some of the advice and tailor it to each specific operation, but it certainly should be looked at as one part. Do we need to do LRP on a certain percentage? Are we comfortable with short futures hedges? Or do we need some sort of a put strategy in place to protect downside risks? All three of those really, LRP, options, futures, should be considered in part of a integrated risk management plan.
Very well. Chip Nellinger, Blue Reef, thanks very much for your time today.